And welcome back, everybody, to another episode of the AJ Brown Show. As always, the main man, AJ Brown, is in the house with yours truly, the co host, Cyprian Francis. Good morning, AJ. Today is November 19th. How are you doing, my friend?
I'm doing well. I'm doing well. I'm getting used to being a daddy over here.
I feel like that suits you well, right? I saw some pictures of you holding the baby, chilling, right?
I
How's
mean,
that?
I am stoked about the whole thing. I mean, I've been doing so much my whole life, and now I'm pushing 50 years old, and I'm starting something new. But it's kind of cool.
That's awesome. And you said that the baby's kind of chill, right? I'm assuming she gets it from you.
I mean, that's there's a reason why they call me the most disciplined options trader. I think behind my back they call me the most laziest options trader. It's because I like to be very efficient about moving from point A to point B. I don't like to take extra steps. I don't like to get excited. I like my emotions to be even keel. So yeah, maybe she takes it from me.
Hey, we'll see, right? She's only a few weeks old. And we got
True.
we got to get we got to get that quote out there some more because in our eyes boring is good, right? Boring is consistent, boring is profitability over
That's right.
time. And today is a big day, right? Or at least a big day in the world of how you structure your strategy and whatnot.
Yeah.
Options expiration. So, what do you have for us today? You got any secret sauce?
Yeah, so it is options expiration day for the month of November. So anybody who's in some November monthly options, today is your day, right? Um, I wanted to cover really quick about the uh, what an option is, right? Because a lot of people forget that. They know that they can go out to the different exchanges and they can buy and sell these things, but what is an actual option? I mean, you got to realize that in the derivatives market, the options market, we, the investors, create these things, right? They're actually contracts between us and somebody else, right? It's an agreement between the two. So if you're selling options the way that I do, you actually are taking on an obligation, a commitment that you need to be able to exercise on. So you're I like to compare it to like dating, right? It's like you're the one who is now committing to perform, whereas the buyer, they have not an obligation, but they have the right to ask you to perform on expiration day or any time before expiration day. So if you're the seller, you have a commitment or an obligation if that buyer that you sold your option to ever comes a knocking. And it doesn't have to be the exact buyer you sold your option to, because they can buy and sell those contracts that they've done many times over. So it could be some buyer out of the blue could come over to you and say, I'd like to exercise you. Let's take a look. I'm going to move over here on my charts from the S&P 500 index, which I always check in with, to our favorite Mattel, right? Ticker MAT. We've been following this for a couple of weeks. And when we sold our option premium, we sold it at the $22 strike price. We were saying, hey, somebody can buy this call option from us. And what does the call option mean? The call option means that, hey, I can call you out of your position on Mattel, ticker MAT, any of that stock you own. I can call you out of that. I have the right to do that. And you have the obligation to perform. Give me your stock. And in return, I'm going to give you $22. Now, we sold that back when the Mattel was around 21.50. We had bought Mattel all the way down here around $19. So already right there, we locked in like $2.50 of gains, right? And we were expecting, as you can see right here, about 3 weeks ago, we were expecting Mattel to start heading back down. And instead, Mattel kind of went back up, but that's not a problem. This is what's going to happen. This Friday, right? The buyer is going to come to us and say, hey, it makes sense for me to buy that Mattel stock from you for $22 as per our agreement, our option contract, because then I can go flip it right around and sell it. Right now it's going for 22.78. I'll make 78 cents, and I'm okay with that because I built that into the economics of my position, right? I'm okay because I bought the stuff down at $19 and that guy gave me like a dollar per share to have that contract, to have that right. So my break even price is actually even lower than what I bought it at. I bought it at 19. My break even price is actually down at 18 because I got that dollar for getting into this agreement with this person. So even if they decide, hey, I'm going to exercise my contract, I'm going to call you out of your stock position, I'm going to pay you $22 so that I can then go ahead and sell it at the retail price of 22. Currently it's at 22.74. I can sell it and make a couple pennies there. I don't care because I'm in it for $18 now because he paid me a dollar off. He or she paid me a dollar off of what I bought it for at 19, and he's going to give me $22. So I'm going to walk away really fat and happy with some profit in my back.
It's payday, right? So the
It's
moral of
payday.
but in theory, that money's kind of been sitting in the account. It just hasn't completely locked in.
Yeah, that's exactly right. And the other option is like what happens on American Airlines. So we did the same thing on American Airlines, ticker AAL. That's another one we've been following. And on American Airlines, we sold our option premium up at $22. We had purchased it down here. I think we paid just under $20 for the shares. And then we sold our option premium saying, hey, anybody who wants to give me a couple of dollars, or actually, I think we made 75 cents, something like that, I'll let you have the right to call me out at $22. I don't have any problem giving you my stock if you want to give me $22. But at this point, by the end of today, the stock is down here at like $19.26. So it doesn't make sense for somebody who gave me a couple of bucks a while back to have that right to do that. Why would you pay me $22 when the retail price is $19.27? So at the end of today, I mean, there's a slim chance that somebody will be crazy and want to exercise that option, but more than likely this thing's going to expire worthless. Nobody's going to use that coupon that we sold them, right? So I'm going to just get to keep that money that they gave me, and then I'm going to get to do it again next month.
So it looks like using the option strategy, we made money in Mattel going to the upside, and we made money in American Airlines going to the downside. Both the profits are going to be locked in today. And so, do you start looking for your next positions now, today, next week? What's the strategy there?
I mean, my eyes are always on the next position. I mean, right now I'm looking for the best opportunity on that flowers, 1-800-flowers.com. Getting into flowers just a couple of weeks ago with my underlying, I am looking to see if I think this is the best time to sell premium for next month, December, right? So maybe I want to sell at this point now that I kind of see that it's topping out. This is when I want to buy my $35 or sell my $35 strike price call option and then allow this thing to go down, because I like to sell these things. It's called legging into the position. I like to sell these things when I feel like it's going to be on its way down, because the ideal case is that I get to do it month in and month out as many times as possible.
All right. So those are our three most recent trade examples, positions.
Let me go
Uh,
back to Mattel really quick, Sip. I want to talk about one more piece, because with Madar going to be getting exercised out of our position, but don't forget, we also bought some protective options down here at $18, right? So it's called buying a protective put. We collared the position. So if by any chance this thing, collapsed down, we would be in a risk, our risk would stop at the $18 mark. Well, I've still got those $18 puts. They're not going to expire until March of next year. And so what are we waiting for with Mattel? Well, we're waiting. We're not going to liquidate those puts at this point. Yeah, we're going to get exercised out of that position, but I'm going to wait patiently for this underlying symbol to go back down as it has done historically. I'm going to let it find a bottom, whether it finds a bottom at $21, $20, or all the way down here where it found last time at $18.50. Wherever it finds that bottom, I'm going to be ready to go ahead and sell those puts, because puts, they operate differently than the stock. When the stock goes up, the put goes down. But when the stock goes back down, the put price goes up. So I have some time. So I'm going to still be in this trade looking for the next opportunity to sell back that protective put.
So you're just going to keep
Make a little bit
riding
more money.
Mattel up and down and sideways and forward and backward.
That's it. And people are always saying, "Hey, man, that seems somewhat complicated." It isn't complicated. I'm doing maybe 3 transactions a month, right? Some people are like, "Oh, no, this is what I'm doing." I'm like, "You're doing like 2 transactions a day. You have to be glued to your computer." I do like 3 transactions a month, and I'm bringing in ongoing incomes every 3rd Friday. There's some people who are trading weekly options, and they're making their money every week, every Friday. I do the monthlies, of course, and so I make it once a month, and I make, it just keeps coming in.
Yeah, I was going to ask that about the what's the biggest difference between the weeklies and the monthlies?
The liquidity, it's called liquidity. So weeklies are not as popular, and therefore there's not as many people trading them. And so if you've got a portfolio that's under $25,000 where you're doing just small numbers of contracts, then that's fine, right? You can do the weeklies as much as you want. When you start to have a portfolio like mine that's in the 8-figure range, there's not enough people trading. All of a sudden, you're the biggest fish in the market, and you start doing trades like that, and all of a sudden, you're moving the price, and people don't want to play with you, right? So I stick with. You'll notice some of these companies that I've been showing. They're big companies, right? American Airlines, Mattel, the toy company, flowers.com. They've become very popular, especially during the pandemic. They've got a lot of people trading them, and I'm not the biggest fish. So that's really the big difference, is liquidity. How many people are in the bullpen? Like I said earlier, options, we create them. So you've got to have, a lot of people in there buying and selling the stocks, and then wanting to buy and sell the options for there to be a marketplace to buy and sell these things.
So I read today that the Nasdaq hit all-time highs,
Right.
right? Do you have any tech plays? Anything riding in the tech sector? Is that affecting anything? I mean, I know the answer, but I feel like, maybe there's something there.
There's an ongoing ongoing symbol that I watch in the tech sector, and it's called Cisco Systems. And Cisco Systems just did their earnings play, which is fine, right? Because again, we really don't mind whether something goes up or down. We just like to take advantage of the third. It's all about time passing by for us, letting that, what we call theta decay, take over, and the options premium value. And so this little drop down in price from their earnings 2 days ago, right ahead of options expiration, is fantastic, because I went and sold the $58 call. So this means that, guess what? I get to keep the Cisco stock and do it all over again. So Cisco is one of those candidates that I just love playing in the tech sector. They're the ones who build all the components that, power the backbone of our internet.
And what was the time frame on that play for you there? Because wouldn't that expire today?
Yeah, that's going to expire today, and it's going to expire worthless, because who would want to try to pay me $58 for my Cisco stock when they could go right off on the market and pay $53.32, right? It makes no sense for somebody to want to do that. So those coupons that I sold, where people actually paid me to have that right to buy my Cisco stock at $58, they're going to expire worthless. Nobody's going to use them, and I'm going to get to keep the money. That's what selling premium's all about.
And if anybody's watching that hasn't already checked out AJ's webinar. I am going to go ahead and put it into the chat. But that is AJ's weekly webinar, or actually, it's a daily webinar. Sorry about that. Where he breaks down the strategy so that anybody that wants to learn can follow along. And in addition to that, there's some access to, I think, the one of the traders' education zones, and the opportunity to join AJ's weekly mastermind call, which I always like to bring up because I think that it's awesome to be able to come together with like-minded individuals and discuss opportunities. And I don't want to always like ask what you guys were talking about, but anything interesting that came up from yesterday's discussion?
We had 6 candidates that we could not choose from. So let me just emphasize, some people are like, well, the market is trending. How do you find symbols in order to sell premium against? Well, there's always a symbol to sell premium against. And that's why also built into that, program. By the way, if you go to that free workshop, you're going to be able to get all the information you need on how to sell premium yourself. But if you wanted to be part of our program, we've got all sorts of things that kind of help along, like that Thursday workshop that you're talking about, where we get together. There's 400 active members in our program. We had quite a few people on the line last night throwing tickers at us, and we were looking and we couldn't decide what was the best of the best. We picked one. We picked Delta Airlines. That was a really nice one to plan out for ourselves. But there were 5 other tickers that I said, "You guys, you gotta go home and you gotta plan these out on your own. If you want, you can send me a message and I'll look over your shoulder and make sure that you planned it out, without missing any, dotting all your I's, crossing all your T's." But there's just always something to sell premium against.
All right. So the link is in there. Anybody wants to check that out, jump over there. Delta Airlines, right? That's the secret ticker of the week. So, the only way you get to find out what the position is if you jump into the webinar and you join the masterclass. And
if you want a quick one, I got to give you guys one more quick one. Ford has set up real nice, especially after giving this dividend. If you want to make a quick little buck, you could either sell some cash covered puts or do a buy right on Ford for the month of December and make a nice little, get the transaction out of the way right now. And then just on the third Friday of December, just cash in on it, right? Ford set up really nice.
have you heard anything about this Rivian IPO?
Oh, I'm way into electric cars, right? So I love Tesla. I love that. What are they coming out with? The Hummer, the Rivian. Uh, Over here in Washington D.C., we have a big giant mall called Tyson's Corner, where they've got now a new store that they're featuring the Lucid. That thing's pretty fly.
So that's like the Chinese Tesla, right?
It's actually, I think it's an American company. It's built in Arizona, Chandler, Arizona, the Lucid. I don't know about this Chinese one, but the Lucid, I think, is an American company. It's got a pretty hefty price tag. I don't think I'm going to be affording it anytime soon.
Yeah, well, the Rivian caught my attention because of how quickly its market cap overcame the legendary car companies. I
Yes.
even read at one point that they were more valuable than Citigroup,
Yeah.
and have never sold an actual car.
There's a hype. Hype has a lot, right? There's a lot of excitement, especially, that's funny that you say that, because some of the companies realize how much pride their customers have and intentionally, like, manipulate the price of their stock so it's affordable. Think about Apple. For years, Apple was trading out of the range of anybody who was an investor. It was up in like the thousands or a couple of $1,000 range. And they intentionally, you hear about splits, and usually splits are 2-to-1. But Apple did an 8-to-1 split to bring the price of their stock down because they knew how loyal their customers were, and they wanted to give their customers a piece of the action. And actually, General Electric did the same thing, but in opposite, right? They knew that their customers were a little bit, kind of worried because the stock was trading around $10 a share. And, $10 makes you seem kind of worthless, especially if you've got all the history and names of GE. So they did a reverse split, pushing the price of their stock up to $100 so that people would get more interested, who are the customers, right? So there's something to be said about the Teslas, the Apples, those companies. Netflix is another one that likes to do that. These companies know how valuable their customer base is, and they want to make, customers who are really loyal to a brand there's something to be said about making them investors.
Yeah, and that's interesting because there's a hot topic in Chicago right now where someone brought up selling the Chicago Bears to the fans. Now, I know that's not a stock market, but the concept of the ownership and the demand for wanting a piece of that can float it, right? Can bring the
That's right.
capital in, right? All right, AJ. Well, do we have any last words? I feel like we just want to get people into the webinar because there's some really good stuff in the weekly calls and in all the content in all the positions. We're
Well,
expiring. Go
I
ahead.
think I think what we're gonna be doing here is this upcoming month, we're gonna be definitely outlining the actual purchases we make and any of the selling we make. So we're gonna take a deep dive in the next couple of shows where when these things set up for us, if they set up for us in the previous like 6 days, we'll show the exact transaction we made, and we'll keep track of it and show you the actual dollars and how easy this really is. It's rinse and repeat, rinse and repeat. That's all it is. It's sell premium, buy protection, let that premium expire worthless, sell that protection back, rinse and repeat, rinse and repeat. Couple transactions a month per position. It's not day trading, right?
Yeah. And I think you've got some live events coming up where you're going to be speaking. So we'll go ahead and get that into the mix. I think we'll get some emails. We'll post it on the social. We're going to have another live stream next week with a special guest. So keep an eye out for that.
Yeah.
And it's going to be Thanksgiving next week. So are you trying to hold off anything until after Thanksgiving? Everything's just kind of on
No.
auto basically.
I mean, everything I do pretty much is on auto. Some people know that what I like to do is I like to come in the evenings, right? I come into the evenings, I analyze what the broad market did for the day, and then I look at my watch list, I look at my hot list, and I see, is there anything that I need to have, take action on for the next trading day? And then all these beautiful trading platforms have some automation built in, so I wind up just pre-programming my orders the evening after for the next trading day, and I don't see it till the next day, right? I don't the trading day is not here's I know how emotional I am. It must be some of the Italian blood that's running through my veins, but I know how I can get ups and downs and get kind of overexcited. When I walk into any sort of casino like in Atlantic City or Las Vegas, or the one time I flew to Macau, and I start hearing the sounds of the slot machines, I start grabbing my wallet. I have no self-control. So the way that I've dealt with that is I'm just not there, right? During the trading session, when I see all the prices moving up and down, I don't have my computer on. I trust in the analysis I did the night before and the automatic trading rules that I placed the morning of to let that run through the day. And I just come back in the evening and see how it pans out. And it also frees up my day, right? So I can do stuff like take care of this little one that's over here off camera.
Yeah, we'll definitely have to dive into that some more because I know I'm interested in seeing more of connecting the dots. And then maybe even bring it into the mobile component, right? Because I do have access to all the positions on my phone. So I'd love to see how easily it is to take the information that you're seeing on the screen, pulling it up, placing the trade, right? Legging in the other one, right? I think that's something that people might find a little bit tricky is getting a put, getting an, I know for a new trader like myself, But that's, we got plenty of time to go over that. And if anybody really wants to see it more, jump in that webinar and join the class for sure.
Yeah, do the workshop. And like you said earlier, when you go be part of that workshop, you should also sign up for free access into our web portal. You don't, there's the paid part where we open up more aspects of the web portal, like the screeners that I've created that help people find these symbols. But there's free access where you could read my white papers, you can get some of our index stats, stuff like that. So not only watch that workshop, but get that free access. But, here's the scoop. We've been programmed, and I was watching that special on YouTube about Will Smith, right? And he was talking about all of his programming as a kid and how it's played throughout his life and how he, pushed it on to his kids and stuff like that. And his big program was that he's got to work harder, right? He's got to work hard and he'll get the payback. That's a good mentality for some things in life, but not for investing. So investing is you want your money to work for you. So it's not about working harder, it's about working smarter. Some people come with that mentality of I've got to put in the hours, I've got to put in the work. No, you just have to be really smart about things and let the money do what the money does, right? And so if you almost work, one of the things I did with my student that I didn't do it with my student. My student self-imposed that. I had a student, I want to say 11 years ago, whose wife decided that, hey, the kids had been out of the house and it's time for us to rent an RV and drive cross country. And he was so worried because he wouldn't have internet. I mean, this was 11 years ago, which was like a millennial ago with as far as remote access into the internet, right? But he set himself up with the hotspot of the time. And so every time, and his wife made him do a lot of the driving. So he wasn't able to look at the computer screen. So he had to become very strategic with the small amount of time that he wasn't involved in like RVing to do the trading versus what he was before that, which he had unlimited time and he just stared at the computer all day, wasted days, right? And it turns out that when he was RVing and not able to be in front of the computer all the time, he got extra strategic and he wound up, even though he was doing fewer transactions every week, he wound up making more money. And so it's a mind shift game that people have to play with themselves in order to get past that whole thing of I have to work really hard at investing and spend all my hours at investing to be successful. That's not it. You have to start thinking outside the box.
And that's what's having a mentor like you around very beneficial because we can ask questions, you can help reassure us of those feelings, right? And that's what the community and the group is there for, to help. And I think we should leave it at that, right? Like, don't overdo it, trust the system, and enjoy the time off, right?
That's right.
Because
I mean, it's awesome being lazy. I mean, Tim Ferriss made a whole life about it. Just be lazy, be efficient, but be relaxed, right?
all right. Well, thank you everyone for joining us today. We'll be, posting this on all of the socials. If you're not already following the Trading Trader social channels, we've got the Twitter that's starting to get a little action. We just launched a new TikTok, which it's still new, right? Still kind of new to us. The Facebook, the YouTube, and as always, you can email the team, leave any comments in the chats, and we'll be sure to get back to you. So, AJ, as always, it's been a pleasure, and I hope you enjoy the rest of the Expiration Friday.
Yeah.
And yeah,
Thanks, Sip.
we'll
See you
see you
next
next
week.
week.